Good morning, everyone. It is a pleasure to introduce you to PIX Resources. I'll assume that everybody has read the disclaimer. Nick will go directly to page 4. PIX is a mineral sands mining company. We are dual listed on the National Stock Exchange of Australia since February of last year. And since November 15th, so 2 weeks ago, we're also listed on the main market of the London Stock Exchange. We're a mineral sands business, and we have the second largest producing mineral sands company based on Zircon resources worldwide. Not only do we have a very large Zircon deposit, we also known for our very superior quality. A superior quality in terms of assemblage value. So this is the weighted average of the price of the minerals, of the valuable minerals in our mine, which is of $1,680 per ton, which is from 3 to 5 times higher than the rest of the listed mineral sands companies. We also have a low content of radioactivity of uranium and thorium, a low alumina content, and a very white product. All these characteristics makes our Zircon ideal for the fused zirconia industry, which is the one that uses Zircon for high-tech applications. So we use it for semiconductors, batteries for electric vehicles, solar cells, etc. Our project calls for an increase of volume to 48,000 tons. And at 48,000 tons, it generates EBITDA margins of around 60%. And timing for all this could not be better. There is a trade war between Australia, the biggest supplier, and China, the biggest consumer. And both of our mines are in central Kalimantan, Indonesia, which is a Belt and Road country, and with that, a strategic partner of China. There's also, which was projected, lack of supply. There's not enough Zircon supply in the world to satisfy the actual demand, and there's still many countries that have not ordered normally because of the pandemic. So there's a huge lack of supply. As a result of that, we have increased pricing 4 times this year. Just that you have an idea, in December last year, we were selling at $1,316 per ton. Today, we're selling at $2,400 per ton. And I'm convinced this pressure on pricing will continue because there's no new supply in sight. And as I mentioned, there will still be additional demand coming into the market. Next slide. Over the less than 2 years since we originally listed, we have been focusing on business fundamentals, on growing the volumes, which we grew 37% last year, 14% in the first semester of this year. We continue to have an extremely solid order book. We have sold our entire production until the end of the first quarter of 2022. Again, there is a lack of supply, and we're known for our very high-end product. In addition, Rio Tinto, who owned the largest Zircon mine in the world in South Africa, closed their mine this year after the assassination of their manager. So we believe that these fundamentals will continue in the Zircon industry. We have a great project that is based on growth of volume, a huge opportunity of drastically reducing our costs by getting away from third-party contract miner and do our own extraction. And at the same time, we are starting to produce rutile and ilmenite, which are byproducts of our Zircon production, which we will start selling in the first quarter next year. So in addition of these operational improvements we can do strategically, we have acquired a second mine in February this year, and I see ourselves becoming the consolidator of the mineral sands industry in Kalimantan. Next. As I mentioned before, we have the 4th largest Zircon mine in the world by Zircon inferred resources. The second one in production, because Aston and Sheffield are non-producing assets. Next. As you can see, as you can see, the assemblage value, you see that we have 70% of our valuable minerals are zircon, which is what you want because zircon is the most expensive of those minerals. So while zircon is selling today at $2,400 per ton, rutile is selling at around $1,100 and ilmenite at $250. So we have more of the expensive minerals, which gives us the high assemblage value. Most of the mineral sands mining companies in the world are ilmenite miners that have byproducts of rutile and zircon. It's also a low capex project. We don't hardly have to invest in logistics, which is a very high capex line in most of the projects. Our offices are in Palangkaraya, which is the capital city of Central Kalimantan. It was one of the projected cities to become the new capital city of Indonesia. As a result, we got an airport, hospitals, hotels, a government paved road all the way to both of our tenements and to the factory, and also government paved roads from the factory to high volume ports, which are Banjarmasin and Sampit. These ports are already used to export iron ore, palm oil, and coal. So we don't have to invest in all this logistics, which is usually the lion's share of these projects. As you can see on the next slide, we have on the x-axis the grade of zircon, so the percentage of zircon, and on the y, the titanium oxide. We have, compared to all the other publicly traded companies, a very high content of zircon, as I mentioned. In our first mine, which is the Mandiri tenement, we have a content of 4.8%, while Tisma has 3.3%. And then we have a lower content of around 1% of titanium oxide. You want this, which you see on the next slide. It increases your assemblage value, which is the weighted average of the minerals you have in the tenement. So while 1 ton of our material is worth $1,680, you'll see that the average of our peers is from 5 to 3 times lower of what we have. So this gives us a natural high margin. So it's the margin that nature supplies. On page 10, you will see a picture of our tenements. This is actually mining in the sand. You see that on the right side of the top picture, what you see is gray sand. So we hardly have any overburden, which allows us to reduce the mining cost. We're also very close to the Kahayan River, which you see on the top left, which is the largest river in Central Kalimantan. And in the future, we will be able to reduce the cost of transportation by using barges down the river to our factory. In the next slide, you see an image of our factory. We have been in production since 2015, so we have been producing and selling our products for 6 years. With the IPO last year, we invested in increasing our production facility and the mineral separation plant to 18,000 tons per year. Just announced yesterday that we increased this production capacity by 33% in order to create a capacity of 6,000 tons to produce rutile and ilmenite that we should be selling in Q1 next year at 100% margin, because we have been absorbing the production costs in the zircon production. It is an environmentally friendly process all the way from the extraction to the production. It's all based on gravitational separation and then magnetic and static separation. Since we have been in production since 2015, you'll see on the next slide that we have a very well diversified blue chip customer base. We have customers before the pandemic, the bigger part of our sales were in Europe, so in the UK, Spain, France, and Germany, while during the pandemic, it migrated heavier to China and towards India. We have started to export to Brazil as well. So we're covered with a big diversification geographically and in the different industries, which protects us from niche crises. You go by slide 14. I mentioned earlier that there was a lack of supply. This is a projected lack of supply. The industry has known this for a long time, that there would not be enough zircon to satisfy the demand. It was delayed by 1 year because of COVID, but today there is no new capacity coming along that will close this gap. So I believe this pressure on pricing will continue. On page 15, you will see that this industry, the Zircon industry, is also a very disciplined industry in the sense that there's 5 main players cover 72% of the world supply, which helps bringing discipline into the market. Zircon is a commodity, and as such, prices go up and down. But if you look at the pricing for the last 16 years and cut through the commodity super cycle, the trend has constantly been going up and is now exploding at the price of $2,400 per ton, and it should continue doing that way. On page 16, Zircon is used for very high volume industries. It's used for ceramics, foundry, refractories, and pigmentations. But the fastest growing segment are the high-tech applications where you use Zircon for semiconductors, batteries, for electric vehicles, solar cells, etc. So that's the industry that's consuming at a higher pace. Going to slide 18, you will see the margins that this business generates. In the first, if we just compare against the industry leaders, so you compare the PIX numbers to the ones from Iluka, the first is the revenue per ton, which you see is much higher in our case than the others because of the assemblage value, because of the amount of valuable minerals we have in each one of our tons. The second one, the right way of doing it in the mining business, you initially explode the highest grade of your tenement, obviously to optimize your EBITDA value. So what you should be considering is the average of the entire mine. So we can still go into higher concentrations part of our mine. You will see that our costs are still relatively high because we're starting the process and we're still using only third-party contract miners and have a huge potential of reducing the cost by $800 per ton. But although we are producing 50 times less than Iluka, we're generating similar margins than them. So as we grow in volume and reduce in margin, we have a cost, we have an incredible opportunity of increasing our margins going forward. Going to the next slide, you will see the valuation of the business. So I'm sure you can understand that at the end, the mining business is valued on how big is the asset. So how big is the content of valuable minerals in your asset, which you will see on the y-axis, which is the enterprise value divided by the amount of resources, or the market cap divided by the amount of resources. And on the x-axis, you will see the assemblage value. So the higher your assemblage, the more your resources are worth. So if we map where the different mining businesses are today and extrapolate through there, you will see that PIX still has a huge potential of increasing its share value. We believe, and investment banks that follow us, we have an investment bank in Hong Kong and one in London that do research on us. They're projecting our share price in the short term, which they define as 12 to 18 months, to be at the value between $3 and $3.30. I'm talking about Australian dollars. And today we're at 160. So we should be able to double in the short term, and in the longer term, I believe our share price should be able to go between $5 and $7. On the next page, you have seen that the market has liked our company. I mean, since the IPO in February last year, in less than 2 years, we have gone from 40 Australian dollar cents to 180 at the max. I think today we closed at 160. So today we're at 79 pence per share, and a market cap in pounds of 370 million tons. So we started at around 50 million pounds and we're at 374 million today. We have, on the next slide, you will see our shareholder base. We have a free float of 33%, and none of the former shareholders, original shareholders, have sold because they're expecting the upside, as I mentioned before. On slide 22, you will see the performance of our shares compared to the rest of our peers. So we have outperformed the different players in the market. We have also outperformed the metals and minerals index from the ASX. On page 23, in summary, you will see that operationally, we're working on fundamentals. We're growing the volume. We have a huge potential of reducing our costs. We are starting to produce rutile and ilmenite that we will be selling over the next months. And strategically, we have an incredible opportunity to become the consolidator of the mineral sands industry in Central Kalimantan. And as I mentioned, timing could not be better. There is not enough zircon supply in the world, and there's no new capacity coming on board, and we're ideally placed in Indonesia. So with that, I've finished my presentation, and I'm happy to answer questions.
Thank you, Oliver. Yeah, we've got 3 questions come in. First one, thanks for the time and outlining the details for PIX. I have a question. Currently, zircon pricing is at its all-time high. However, your net profit is negative. Would be good to know your views by when you think you'll be profitable.
Sure. I mean, we have to remember that we really just started this project of increasing volume. I expect us to break even during the first quarter of next year. And as we're investing in increasing the capacity, we should become profitable. As I mentioned, at 24,000 tons, this has EBITDA margins of the mid-30s, and at 48,000 tons in the 60%.
Thank you. A question about operating Indonesia. Now, the president of Indonesia recently spoke of stopping exports of bauxite and various other minerals in the coming years. What do you make of this, and do you think it will have any impact on you?
I don't think so. I mean, if we look at what Indonesia has done over the last several years, they have progressed a lot in the mining licenses. They went from COW licenses to the IUP, which is much more transparent. They depend largely on the mining industry, on the exporting of the mining industry. And within the mineral sands, they changed the regulation in June this year, and they're allowing, they have reduced the conditions of exporting rutile and ilmenite, which is easier to do now. They have also centralized zircon, rutile, and ilmenite under the same departments as far as giving licenses. So I believe that if something, it has become easier to do business and to export in Indonesia. And if we look, they have had a very good last many years. There's some bad stories from many years ago, but over the last many years, Indonesia has done very good progress.
Thank you. And finally, question which always gets asked, what do you see as the biggest risks to the business?
The biggest risk probably to the business is if the world finds a substitute to zircon, so that they could migrate from zircon to another mineral, which the experts don't think will happen today. The easiest substitute is aluminum oxide, which has increased more than zircon has increased. So today there's not an evident immediate change. So I think that's probably the biggest risk that exists, but we don't see anybody in the short term being able to come up with another solution.